Hello traders and welcome to a new weekly market review. This is the first week of the month, August 2026. We are going to review the market for the upcoming week, starting from 3rd of August till 7th of August. And the major news for this week is the non-farm payroll and unemployment rate that is coming on Friday. Monday, there will be no news. The market will be closed during Asia session and during Canadian market, but the market will be open during the New York session. And then Tuesday, there will be no major news. Wednesday, there will be news announcement during Asia session for the Kiwi, and Thursday the market will be not expecting any news. It might be medium impact news, which you can check it like this. Highlight the medium impact news, check it, and you will find the medium impact news on Thursday, which is the preparation for the unemployment rate that is coming on Friday. The market will be waiting for the unemployment rate and non-farm payroll on Friday. Anyway, we are going to trade what we see, not what we predict or anticipate. So let's go to the chart and we will analyze the DXY as a start. As a start of the month, I like to look at the monthly chart to see the key levels that we are going to trade. If you see, this is the monthly chart for the DXY, and this is the move of the previous month, only this candle. Let's now go to the weekly chart and see what happened. So on the weekly chart, the market moved higher, took the liquidity from the previous week high, and then pushed aggressively lower like this. So let's go to the daily. So on the daily, as you can see, on Monday, the price was in this consolidation. It moved higher on Tuesday and then start pushing lower. If we go to the 4-hour chart, this is the 4-hour chart. On 4-hour chart, the price had an SMT, one SMT here, and we had another SMT here. If you check it with the dollar, if you check it with the gold, with GBP USD or Euro USD, you will find that there was inverted SMT, which I already shared in my community last week on those trades. So this is what happened on DXY. Let's go back to the weekly chart and let's adjust the level like this. Previous week high, previous week low. What I can see from the structure, I like to see one push lower and then continuation, at least to take this liquidity from this candle before the next aggressive move toward 102. This is what I was waiting for a long time, and I think it's going to happen very soon. But we are not going to trade what we think. We are going to wait for the market to give us the clues and then we will trade accordingly. Now let's go to the gold and I will show you some trade on the gold from last week. Again, this is the monthly chart of the gold. As you can see, the month of June, it was really aggressive move. The market moved lower. But for the month of July, the price was only moving in this level. The price moved lower. It closed inside the range, although it is reversal wick, but I believe it might come and take at least this liquidity. So I'm anticipating for the gold for next week because this has been a target for a long time now on the monthly. This is November low, and also the market need to take the low of June, expecting for the price to come and take this low before it change the direction. So we will need to see and trade the structure. Now let's go to the weekly chart. The weekly chart, the price did not take the low or the high. It created this small doji because the market was still uncertainty. Irrespective, they were good trade both ways. The market was going higher We were catching trades. The market was going lower. We are catching trades based on that structure. And I'm teaching this in my community about the liquidity zones and what we are looking when we are trading this kind of structure. So now let's go to the daily chart. So the daily chart was in the range from Monday. The market head higher, then goes back in the range, move lower, then go back in the range. So now after the daily chart, let's go to the 4-hour chart. So on 4-hour chart, they were good trade. Although the market was going in the range, they were good trade in the continuation, moving higher and moving lower. So the price was starting from here on Monday. The price did not take the high or the low of the previous week, but it was moving in the range, capturing both ways. So if you are this move, so you can take this move lower. There was a trade because the price closed inside the range at the fair value gap level before moving lower. This is very good, 80 pips moving lower. And then there is another trade moving higher. And those kind of trade, you cannot see it in the 4-hour chart. You have to move for a clear structure on the 1-hour chart. Here on Monday, the price tried to push higher to take Asia high, but it couldn't. It moved inside the range. Here there was a good trade as a continuation. This is another good trade moving lower. And then there is another trade from here on Wednesday, just before the FOMC announcement. The market was in a shallow movement as it was waiting for the FOMC announcement. But before the FOMC, during New York session, the price gave us this because it was near the previous week low in the liquidity zone and below the New York midnight open, and then the price push higher for about 100 pips. And then this is the announcement of FOMC. You wait for the market to settle and then take the next trade. So the market settled, tried to push higher, but it couldn't. This is the trade. You can take this trade. And then there is another one trade from here at this fair value gap moving higher. I actually did not capture these trades, but I was able to capture this trade moving lower on Friday. So on Friday, I took this trade from here to here. Another 50 pips move from here to here. Moving into the monthly chart of British pound, US dollar, the monthly candle close as bullish, but it is within the range. This is the weekly chart of the British pound. The price took the high and took the low. So let's see what happened on the daily chart. So first it took the low and then start pushing higher. Was a very good entry because this is the fair value level as the market was trending higher. The price came at this phase 2 before moving higher. In the 4-hour chart, so you can see this is on Wednesday, the market tried to push below this wick, but it couldn't. So it took us about a day for this push, which was very good. So in case you don't want to risk taking the trade until the market break the structure, you can wait for the price to come back to retest, and this is another trade over here for a continuation higher. This is a very good trade which you could take. You either take this trade before the break of market structure at the previous weekly low, because the price every time it tried to push lower, it closed inside the range. Tried to push lower, but then it closed inside the range. With this move, it again came back, rebalance the fair value gap which was created, and then it pushed. And this is what I was talking about. This is an engulfing candle also, because it will sweep the prior candle low and then close above the prior candle opening price. This is a good entry as well, which you could take. And this is what I was talking about, the SMT on GBP USD. And let's also check the Euro USD. It has similar move. GBP USD took the low, and also Euro USD also took the low on this at the previous week low before it pushed higher. So this is another key reversal, and this is another inside candle, a good move because it was a manipulation. Another entry could be here because it was a continuation move. This is a break and retest of the previous week high before a continuation. So this is a good trade. Another good trade on the Canadian dollar. It took the high and the low of the previous week, low and high. Going to the daily, the price was moving higher, took the high, and then the candle close inside the range, start pushing lower until it took the liquidity below the previous week low. If you go to the 4-hour chart, this is very easy draw on liquidity, which you can see on the previous week. It took the liquidity on Tuesday. So this is another engulfing candle. So as soon as the price break the previous week high and then close inside, it give us this double diamond pivot before the move lower. This is the price, how it move lower. So this is one entry, this is second entry. You can add into a position here, and then the price move lower until it reached the previous week low. Last week it was the easiest week because it moved within the range of previous week high and previous week low. So what I'm going to wait for the market to tell me if the market is going to continue moving lower. I am anticipating for the Canadian dollar USD CAD is at least to come to this level because it is the move is similar to the DXY. I want to see the price moving lower at least to retest this low of 15th of June and then 8th of June, at least to come to this fair value gap before it continue higher. There is still target for the price to move at least to test this monthly swing high, which is similar to the DXY. So that's it for me for this weekly market review. Trade safely and trade with confirmation, and we'll see you in the next weekly market review. Take care and goodbye.